Alright guys, it's been a while since I posted something on X or Twitter, and I guess let's do it because silver was so good in terms of price action that I felt like doing it. So we're gonna approach this as the classic, super simple top-down analysis, and I always mark these specific levels. Okay, I have everything hidden from this chart because I want to go and walk you through my entire process for targeting selection and level selections. Okay, so first of all, we're talking about this specific week, so I have to mark the previous week's high and low. So PVL, previous week's low, and previous week's high. Great, that's done. These are what I call static levels. I always have them in my charts. Then on the weekly, is there anything that we can identify where I can say, oh, you know what? This is actually a very good level and I want to be aware of that when we hit it. And the only thing that I can see, apart from of course this weekly swing high, which was quite a deep swing because we swung up, we swung down, is really this low. This is a spike low, and call it a hammer, call it whatever. Only thing I know is that we have a small body, we have a big rejection, and the second candle is very energetic. So we call this weekly spike low. Very good. That's it. On the weekly, I don't have anything else to do. I could mark the weekly open and whatnot. I don't use the weekly open for silver. On the daily, this is what I mark. So I'm doing pretty much the same thing, and I look for imbalances. There is lots of conspiracies about imbalances. I don't use them like some people do, but the reason why I use them is because I find, of course, benefits into them. So, or using them. This imbalance right here to me is fresh. Now, this is a blend of both Tom Dante's idea of last low pre-breakout, last high pre-breakout. Basically, the market needs to show willingness to go somewhere, or I am not even interested and I'm not even marking that specific level. So this is something that I need to have marked in my chart. And technically, I could be doing the same thing for this imbalance right here, because we had these highs, three highs basically, and these got broken so nicely, so strongly, that I need to be aware of that level. So this is something I'll be marking as well. But this one specifically, well, let's do it this way, okay? So hopefully the chart will not be too messy. I could be adding this level in here of previous imbalance, okay? Because it's a level of where supply exceeded demand and the market tanked. You can see how in here we start having this effect of we go back in, we stop at 50%, we move away, we come back in. I'm not gonna do that. The most important thing for me is this right here and how the bodies interact within the specific range, okay? And you can see that another imbalance was this one, coupled with this old imbalance. So you can see how both of them work together, but it was resistance, 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 finally broken through, comes back down, and it goes higher. So the idea here is, based on the weekly, do I have any reasons to believe that the market is going to go for previous week's low? Yes, there is a weekly SFP, a turtle soup, whatever, but that's not enough, okay? We also need to have this happening and then the daily really moving lower before I could really be convinced that this is going to be a move to the downside. And to be fair, I don't see that. Sure, this is a quite bearish candle, but it's not a candle that goes through this level of support. So don't care, not bearish. Then we can go day by day, where on Monday I see what? I see that we hit the level and we move away. That's fantastic. So on Tuesday, meaning as soon as this candle opens, what will I be doing? I will be looking for longs. And you can see in hindsight that longs didn't really pan out, but that's beyond the point because you want to be sticking to a process. If we have good feedback from a daily level and we're moving away, odds are it's gonna continue. But it's not a blind buy. You need to be finding levels to get in sync with this underlying move to previous week's high. So I'm gonna go and separate the days. This is Monday, where we immediately tap into the level, and can you already see something? We tapped into the level, we moved away from the level, but we did that when liquidity is at its lowest basically. It's super low liquidity, and you can see by the relative volume, it's shit. So The best opportunities, of course, is when people are trapped. And when people are trapped, what is really going on is people that keep on selling while the market is quite low, and there are people that are absorbing that liquidity. So of course it's going to be showing on the volume, right? So when relative volume is high, that's when it's simply telling you participation was higher than usual. So it's both volume and relative volume. Volume matters, okay? The market goes up, and where does it stop? Well, it stops again at this level of imbalance. It's technically this high, which is again a spike low, okay? We try to get there, and that's something I will be marking in my charts. Notice how I didn't go into the H4. I don't really use it. Market then goes lower, and don't forget that on the daily, therefore here, we are looking for potential bullishness. After we took this low and we rejected, can I believe that the market is going to go higher? Sure, there's nothing wrong with that theory for me. So on this day here, the market then pops higher. Okay, there is no level of clear imbalance, clear rounded retest, nothing, and I'm bullish. And I'm not as bullish anymore. I'm absolutely not bullish now, and we create a small imbalance in here. That's again something that I need to have marked, okay? So I'm gonna do this, and I'm gonna do that. And let's change the color for this to a maroon. Perfect. Now the market breaks lower and breaks lower. Now remember, the bias is bullish. Do you see anything that it's telling us clearly that the market wants to move higher? Absolutely not. Fantastic. So we cannot take the long. We have a bias without ever having a setup. So you need two things in trading, right? It's both the direction. I mean, not always, but for this system kind of is, right? The direction and the timing for that direction, so that you can justify a low risk entry with a good risk to reward proposition. We are not having that right here, so pointless. Market breaks lower, it goes quite low, and where does it go in here? Well, it's taking some lows in here, it's taking the specific low that created a big energetic run and whatnot, and then all of a sudden it comes back in, and notice what happens. We break from that daily level energetically. We have a massive push lower past ATR, which is rejected. We create a hammer, and then it comes back in full force. It opens, it retests at the same level, it comes back higher, starts consolidating. What happened there? Look how high the relative volume was. Something happened. Now I'm gonna be marking the head of the hammer in here and another level, which is this one. To me, this level and this level, technically they are very, very similar, pretty much the same thing. Of course, this happened this happened differently, created a much more energetic run. So I'm expecting, if this is retested, to create a smaller run than what this can create. Okay, don't forget that higher time frame wise, I'm looking for previous week's high to be run. The market then, of course, this day is CPI day. What happens? Consolidation within the boundaries of that we discussed in here. So it taps in here, notice the bodies, notice the wicks, boom, 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 boom. It drops quickly into the level, it absolutely catapults. Now the beauty in this right here is that you can trade it, because I personally did. Now it's time also for the shameless plug of, guys, I have a group where I day trade every single day and I call every single trade, so if you want to join, you know where to find me. Whatever. So the executions in here, the trade, of course you see the good, the bad and the ugly, right? I had a good execution in here, mismanaged it, goes lower, goes all the way down here, take it. This I had to take from my phone because I was getting an haircut, to be fair. And then all of this run up here, I'm not proud of the exits because of the partialing, but I was long this market from 4 different accounts. So I had to collapse some because I mean, it's a stupid reason, but the P&L was quite massive at that point. And yeah, so what was this entry? How did I get there? Let's study the order flow once more. And can you see how, roughly speaking, I'm getting a short here and I'm getting a long pretty much at the same price? Why? Because I'm doing it at key level where participation can be high. Crazy. Market hits that, comes back lower, hits here. This white level, which is the hourly hammer, outside of the boundaries of this, which shouldn't be happening once we slipped and reclaimed it. Notice what happens right there. The market, and I guess I'll have to remove this for a second. We go there quickly. It taps, goes through, stops. It opens, it retests the same level. It goes back inside of the range. So slips, reclaim, and then it comes back lower. I am a buyer when this one is being hit. Plus the spread, you see the execution of course there. So technically in terms of drawdown I got nothing apart the spread. And that level never got retested. Now this also shows that I'm human, and the amount of improvement, because I could have gotten out there, it's absolutely crazy, right? This would have been maybe a 7-hour trade. I'm always working on it. I'm never gonna say that I'm the best trader out there because I would be a liar. But this is quite remarkable how few levels can have this level of precision. Taps here, taps there, reclaims, retaps there. If I go even into the M1, which I did not use for this execution, I'm not a huge fan, you can appreciate how there is an imbalance there, there is an imbalance there, there is a range in here. So if it's a range, volume was building up, comes back down, comes back in, goes the other side. Magic, right? And market keeps on going higher. But don't be fooled into thinking that you need to be executing on the M5. I usually do weekly, daily, H1, M5 for most of the assets that I trade, okay? But take a look at that. This is an imbalance that got retested, and believe it or not, there is a beautiful slicing through, retesting here and here. So level that was used as resistance on the other side of the V or the buy model or the whatever is being used as support. Resistance is now being used as support on the other side. Fantastic. The market creates again summer consolidation, it drops quickly there, it rejects. Why can the market go super smoothly up here? First of all, its volume is very high, we are just moving away from a catalyst and whatnot, but there is also a technical reason. Could you see that before we dropped into the key level, somehow the market made sure to close every little bit of an imbalance, so there is nothing to rebalance, therefore the market can easily and efficiently go for the liquidity all up here because there is nothing to rebalance. And it could have some troubles at this level because yes, it got tested, but again, it's quite a good level. And that's exactly what it's struggling. Market goes there, and this right here, while it's similar in the sense that it dropped lower quickly, so speed into the level, that's something I learned from Tom, is a good thing. And when things are moving quickly, everybody is scared to buy when the market is going down tanking. Everybody is afraid to sell short when the market is going parabolically higher. Those are probably the best entries because that's when liquidity can be matched up the most efficiently, because everybody's steaming in because they're having FOMO, and if you have a good level you just gotta go balls deep. Market drops in here, and now see how it run lower. We made sure that this was cleared. We didn't make sure that this was cleared. So what's going on there? It's going that it's stopping the level, it's coming there, it's resisting, it's coming back lower, and then it's slowly reclaiming here using this high. Sorry about that. Don't expect perfection. I mean, it's but this is the same idea that we went through. Oh my god, that's not good. We went back inside. Oh my god, that's good. The market goes higher. Don't lose the forest for the tree, okay? This is small. Think about the bigger picture. We should be getting to previous week's high. And when do we get there? We get there rather quickly from midnight, 1, 2, and then we go super high. Wanna see some more? ATR. ATR is calling for a around 76 points, okay? Not pips, points. From this low to this spike low in here, we are at 78, so it's already past ATR. But I like the imbalance better for some reason. Inside of this imbalance, where is really the imbalance? Or the question is, can we find a level where we can pinpoint have pinpoint accuracy where the market is probably going to turn. And levels like that are powerful by themselves, but past ATR they're even better, because then it's a mean reversion play. And especially being on a Friday, so the market has been moving throughout the week, that can set up a TGIF trade, basically creating the wick of the weekly candle. Okay. Please notice how inside of this imbalance right here, we have really the level of precision comes in here as this last low pre-breakdown. Is this a good one? No, it's a spectacular one if you ask me. It's better than good, because it's breaking not only this low aggressively, it's breaking all of this super aggressively, and this level is untested. It was never tested before. Okay, so on the TPO chart, this is going to show also as a single print market, and let me show you. Oh well, it's not really doing that for one reason. We began because the open went lower first, so this remains at a naked level. I don't need to see it on the single prints in here, but you can see that there are some single prints in there. Okay, but the key level remains that one, because of course when we had this day in here, well, I was using the weekly, that's why. Well, so my bad there. This was set to be week, supposed to be set on day. And you can see how those levels there, of course I can add more precision by saying 10 ticks per row. You're going to see that that has single prints. See? So for this day we only one timed one way, so we went lower, then we probably wicked in here on the M13, then we kept pressing lower. Very key level right there. Past ATR, don't forget that. So, ta-da! High of the day. Crazy, right? Now, there is no way that I can forecast, I'll tell you this right now, that I can forecast that from here, we're getting down here. I can tell you that from here to here, I can see. Outside of that, no chance, okay? So, this is me being honest. I couldn't see that. How can you use ATR in this case? One way. You don't go pro trend after ATR high has been hit, so you're not looking for longs anymore, and I'm telling you that especially after the key level is hit. So this setup in here with this little bit of an imbalance, or even this setup in here, it's something that I would personally skip, yet it has worked. I will skip it anyway. But the short is a missed setup. I didn't take it, but it's definitely a missed setup. The idea here is that after we hit this level and we came back in, see how we already created basically single prints on the upside. This was intraday, never tested before. It went up too quickly, didn't spend time, didn't spend volume, didn't spend anything. So this one, both in the volume profile and in the TPO chart, is going to show like that. So if I enable this one, say, doesn't matter where I take it from, to be fair, let's start from Asian here till here, you're going to see that there is no volume being represented there. Okay, so the market can get there rather quickly because there was not much traded volume inside of those. Okay, but instead at the POC, for example, the market can really chop and fuck around. Market then retraces in here. You have an opportunity to get short here, you have an opportunity to get short here. If you miss those two, I'm sorry, but you missed everything. I mean, it's not my fault there. And the market comes back lower, hitting exactly that level, and that could be your exit. The market keeps on going, but that's beyond the point, because that would have been my exit point regardless. Okay, so hopefully this was insightful. I don't know if you can call this advanced price action. I don't know, because I don't think it's particularly advanced, but it's definitely very powerful. So hopefully you enjoyed this one, and see you for the next video. And I have no idea when it's going to be released. Bye bye.